Hey, welcome back to the channel, everyone. I'm Doug, the retirement guy with the monthly ETFs. Today's video we have is on the YieldMax monthly dividends, Group C. Now, if you don't understand, YieldMax puts out monthly dividends and they put them in groups and staggered the dividends onto them. So basically, we have Group A, B, and C, and right now we've got the report that came out with C this morning. So we're going to go through each and every one of them, give you all the updates on all 11 of the funds, and see exactly what's going on. Well, let's get into today's video. And before we do, make sure you hit that like button, hit that subscribe button when you're not part of the membership, and hit that ring notification, guys, to know every video that we're putting out. Let's get into today's video. So let's first get into what the monthly pay ETF's growth of the funds are. Now, since this is all new to us doing on the channel, we've kind of only backed up to 1 week. And that is, we've compared week to week on these funds. We will be going to month, so you have a better idea. But we think we have all the information here that we can give you definitely some strong information. The first one we want to look at is going to be the new fund, GMEY. Now, this is an income strategy for GME. And last week it was $50.43. This week it's up to $53.36. That's a 5.81% growth over 1 week. But because these are monthlies, we want to make sure we're always looking at this as a 30-day growth pattern. And this is the only fund that they have currently that's up to 7.26%. Now, don't get excited, don't go crazy, because this is a brand new fund. This one, I don't even know if it's even paid a dividend yet. So it's one of the funds that we have to look at. The second one that I think is the most interesting one out of them all is going to be HOOY, the Robinhood Option Income Strategy. Now, YieldMax has this one on a monthly basis. There's other companies out there that have them on a weekly basis. But on a monthly basis, this thing just produces and goes crazy. It's up 31.34% year to date. It has had a slight little flow, but Robinhood has had that across the board. This is nothing shocking, nothing that YieldMax has done wrong. This thing's down 4.72 for the past 30 days. But overall, probably our best performing fund across the board is that Robinhood Option Income Strategy. When we take a look at the other ones in the 30 days, unfortunately, everyone is still down. They're all kind of struggling, trying to get back to where we would like them to be. And when we say they're down, you take a look at the dollars from week to week, there's not that big a difference between them, but unfortunately, we're still down. So right now, not very strong across the board in these funds. So now let's go ahead and take a look at the dividends, the payout for the dividends. So what we've done here is we've give you the last dividend, which is last month compared to this month. And these are all the dividends. I want to tell you up front, these are reported today. You can still buy the fund today and cash in, get your buy the stock and still be able to get your dividend on Friday. So the X date is tomorrow. So you'd have to do something today if you wanted to invest in this. So we take a look at the funds. A lot of these I'm really excited about. They're all even. If you take a look at the first, basically the first 4 or 5 of them are all even. I love even because here's the thing. You can budget it. You know what money's coming in, what money's going out. So you can pretty much judge what's going to happen with your funds day in, day out. The big one, Robinhood. And that one there is HOOY. This one's steady, paying out $3.86 this time. It paid out $3.85 last month. So very, very solid consistency in payouts and huge payouts. That's almost $1 a week. And it's just phenomenal what they continue to pay. Now, I've done a lot of research on Robinhood. I'm very happy with Robinhood. I like the performance of it. And I actually like the way these guys do it with the monthly. So when we take a look at, that's the biggest dividend. It's kind of our winner of the week. The silver or the yellow comes into it, and that is the CVNY at $1.90, and then the DRAY at $1.56. And both of those are even players. They've been paying that last month, the month before. Very, very solid numbers. We look at the distribution rates, and the distribution rates are basically what you're going to get year to date so far. And the two big ones, the CONY, which is the coin option income, which is doing the covered calls, and then the fiat, which is doing shorts on coin. So you got the upside and the downside of both of those, and they both are paying right around 80% distribution rates. Very, very solid, hardcore numbers. Now, the dividends are smaller than whatever everyone else is doing, but basically when you're looking at an 80% return on your money is huge. The third place, again, comes into the Robinhood fund, the HOOY. This is why I like this. It's great, solid, big dividends, a big distribution rate, very solid package. The next one we show is the return of capital. Now, return of capital always throws people off. If you're not familiar with that, I have a video out there that explains it very well, what return of capital is, how they use it, why they use it, and so on. And it's primarily because, they're doing things in a tax advantage savings for you. So it's well worth watching that video. So when we look at this, a lot of these funds use a 60-40 tax advantage plus return of capital. Now the 60-40 program basically makes it 60% of the fund is coming to you in capital gains, while 40% is standard income. But what we're always looking at this and saying, hey, look at the return of capital, kind of get you more into that kicking the can down the road. And everyone's using a different mix from 94% down to 15%. So it's one of these things is just you want to know your capital, your return of capital, so you don't have to worry about your taxes as much as possible. Our next one's going to be the assets under management. Now your question is going to be is why do we worry about assets under management? And we'll be comparing this week in, week out, because what this tells you is a fund, if they're using 100% cash, return of capital, you'll see the assets under management start dropping off. Now, a lot of these are using options. So they're using, their cover calls and they're using put calls. So if they do have to forcibly sell off product, you can see week in, week out that sometimes you'll see some assets lost, but you'll also see some assets gained. So it just kind of tells us a roadmap of what is going on. If a fund is going sideways, fine. If it's going down, we get concerned. If it's going up, we just want to know what's going on. You want to know where your money's being invested into and what's going on with it. That's why we do this. Now, the other one that we use on this screen here is the percentage of the dividend. So we take what the price of the share is into the dividend side of it to tell you that, like I'll use Robinhood right off the bat, 5.65% of the share is being paid back to you in dividend. That's a strong number. Now, there's two positives and negatives to that. The positive is, man, you're getting some great money off of not a lot of money invested. The other side of it is, though, is when this drops out tomorrow, I guarantee you that the Robinhood fund will be down $3.86. That's how it works. That tomorrow, the first thing in the morning, that they'll pull that $3.86 off the price of the share. Now it's got to recover. The positives with monthlies is you have time to recover to get that money back and then possibly any potential growth. So that's the positive and the negative to it. So, as I say, if you want to wait, you could wait until tomorrow to buy that, probably about the $65 price share, and then let it sit for a month and collect probably $3 in something in dividends next month. And it just makes a different buying package for yourself. You take a look at the fiat, the short coin. This is why you also see big, big numbers here. It's only a $3 fund. Okay, $3 fund paying 18, almost 19 cents in dividends. That's a 6.18% of dividend there. It's very, very high for a small little fund. So that would actually make me a little bit nervous. So it's one of those things you'd like to get in and get out as quickly as you possibly can, unless you see something that just is going to continue going forward. As long as they continue to produce that big dividends, man, that's a cash cow waiting to happen. Same thing with the coin. Look at that, 6.22, and it's a $7.27 stock. So there are some funds out here that are very, very inexpensive to get into that pay some decent dividends. And this is how you just judge a fund if it's paying well, not paying well. Like I would say, I would take a 5% Robinhood over Microsoft one at 1.8. Just different ways of looking at it and saying, hey, where do you want to invest your money and how do you want to put it? Now, return on investment. This is where it critically comes into. If you're not familiar at all with this, there are tons of people out there who invest into the stock market, into fund ETFs. They're doing all kinds of things, and they do this thing called return of investment. So I'm going to quickly explain this one to you if you're new to this and don't understand it. What you're basically going to do is you're going to take a certain, I'm going to pick one stock, and let's use the Robinhood one again. You're going to take the $69.23 for the price of the fund. You're going to take that and put it and buy one share of it. Okay. On average, you're getting $4.88 dividend. Now, right now, I know the numbers are different, but follow me with this because last month we were paying $3.89, so there's a dollar difference there. But overall, the average is $4.88 in dividends. So what it basically says, if I take every one of the dollar of dividends and put it back into my pocket, how quick will I get my $69 or my return on investment back? And this is what people do all the time, is they calculate this out and then they buy and they sit and they wait until they get all their funds back. Then they own the share with no money invested into it, and all they're doing is collecting the dividends. That's what we call a dividend cash cow, that thing just pays and pays and pays and pays. So when you take a look at this, is how fast can I get my money back out of a particular fund? Using Robinhood, looking at that, you're at 14.17 months. So basically just a little over 1 year and you'd have all your funds back. That makes a very, very strong buy portion that you would get into in Robinhood. In 1 year, you got all your money back, and then you got yourself a cash cow. Well, as you see down below, we've already said fiat return on investment is only a half a year. It's 7 months, and you have your funds back because that fund is only $3.09 on a four-week moving average, and its averaging is paying that 844 cents in dividends. Now, granted, I have to always adjust that because this week it's only paying 18 cents, but we're doing this over an average period. So we just always want to make sure you're using what calculations you want. If it's the average, it's at the current of where you're at. But still, anytime you're under 1 year, it is a great person to take a look at to say, hey, I'm into this. I want to buy. The second one you look at is CONY, the coin one. It's 11 and a half, basically 11.21 months, which is I'm going to round that to 12 months total for 1 year, and you have your money back on coin. So there's a lot of pieces in YieldMax's monthly package that make it worthwhile to buy into using the return on investment. I personally use this quite a bit, is that I'm always looking at saying, what can I buy? Fiat. I do not own fiat. I'll tell you that up front. But watching this and doing this, it's probably one I will be very seriously putting on my radar and doing some deeper research, which we'll probably make a video on, but to see if this is a fund that I want to be into for $3 and collecting some nice dividends. I wouldn't be afraid to sit on that for 7 months, and then all of a sudden I have myself a little cash cow. And even if in 7 months we start collecting money, as long as it holds that 7-month dividend, we're doing well. So some very strong pieces there. Now, total return. If you've watched any of the videos I've put out, this is the number one thing I talk about all the time, and that's going to be the total return of a fund. Okay. I really, truthfully will say, I really do not care if what the distribution rate is. Yes, I want to know what kind of distribution or the dividends we're getting, but I don't care what that is because the real answer is what's my total return. And when you look at funds like this, especially from YieldMax, when you see most of the funds, the growth side of it, you're giving up NAV, you're giving up that NAV erosion, which is the net asset value of a fund. This is where you start getting into problems. I want to talk to you real quickly. Let's go to the very bottom one, which is YieldMax's PayPal. PayPal option income strategy. Distribution rate, 31.73%. So year to date. So they've done great, 31% return on your money. but the year-to-date number is down. They've lost value of 38.95%. So literally, you have taken money out of your pocket to give you that 31% dividend because your total return is down 7.22%. Now, I don't know what your goal is on investing, but I'm not here to lose money. I'm not here to put money into something and then sit back and say, well, I owe you some more. I want to take and gain. So we take the other one, the Airbnb, the Airbnb situation. They're down 0.61%. Great distribution, but the year to date has grown negative. So you really have to watch those. And this is where I see the number one factor right now is HOOW. 73% distribution rate with a 31% year-to-date growth for 104% total return. That is what we want. This is one of the big one here, that when you can put money into it, and if you would put it on the beginning of the year when the first fund was available, you would have already doubled your money. So this is where we want to be. Now we take a look at the next one, and that's going to be CVNY, a 60% distribution rate, but it's lost 18% year to date. So your total return is 41.61. Remember those two funds we talked about, the coin options, the CONY and the fiat? Well, look at them. They were our big ones about the distribution rates of paying over 80% distribution rates. But both of them have lost over 60% of their value. So realistically, they're down to a 17 and a 13% respectively. Now, I will not turn around and say, hey, 13% is bad, 17% is bad. Problem is, if you don't get that big distribution rate, then you're going to hurt because the growth of the fund is not there. So these are all the things that you need to put on and understand across the board of before you invest your money. As we talked about, fiat, the $3.09 fund, paying a nice 18-cent dividend this week or this month. And is the fund going to go down? How much more will it go down? Will you hold it for 7 months to get your 13% return? These are the things that you have to mathematically calculate out on your own to say, hey, this is good, this is bad, this is ugly, and work out accordingly. So let me see if I can help you at all with any of this. This would be Doug's top 5 picks. The number 5 is AMDY, and this is investing into the options on the AMD, basically chip market. Now you're looking at a 17.80 total return with a dividend paying out of 40.75% dividend yield over year to date. So some very strong cash input, and you can see there's going to be some down. We know their funds are going to be down, but at a total 17%. I think AMD is one of those chip companies that are probably going to continue to grow bigger as the AI comes into it, as they get their chips out there, because everyone uses the Silicon Valley chips. Number 4 is going to be the Netflix, NFLY. I personally love the Netflix package. I believe we own some of this one from the YieldMax because we liked the 22% return year to date. We like the dividend payout that they have. We think that the Netflix is going to have in the fourth quarter is going to be some bigger numbers because people are now going to be into the house. They're going to be watching things, and Netflix is doing some good TV coverage, and people are going to move towards that. Number 3, DRAY, with a 39.6% dividend yield. 39.6% total return with a 42.68% total dividend return. It's a very, very strong cash forward organization. Our next one is going to be CVNY. Again, 41% total return. Very, very big numbers, very strong numbers. We can do a lot with that. And because we're seeing the big dividend percentage returns, it's able to help us cover any real losses that the fund may come into, any NAV erosion. But our number one for you to seriously look at, if you've not gotten into these funds, is the number one fund I would talk to you get into, and that's going to be the HOOY Robinhood. This is our big winner. This one here paying 104.65 total return a 73.31%. So you're getting the cake and eating it too, because you're getting the icing. The icing onto it is you're getting a growth in the fund, which is what we all want. You're getting a solid, strong dividend, if I remember right, about $3.86. And you're getting a total package together on Robinhood that is very solid and growing. If you look at any of the news, they're starting to express into deeper markets. They're getting into the Europes. They're getting into outside of the US countries. So there's a lot Robinhood has for the long-term future. So in Doug's top 5 picks, this is the first one I'd be heavily looking at to invest into, and then using the rest to fill in accordingly. Guys, it's Doug the Retirement Guy with all the monthly ETFs. If you like what we're doing, hit that like button. If you're not a subscriber, boy, hit that subscribe button, and also leave any comments. Tell me what you guys think about the funds and how you like our layout that we're giving you. Also, if you can help both of the channels, go to that Patreon. There's so much information in Patreon behind the scenes. You can sign up for free and see if it's worth it. And if you can donate to sponsor both of the channels, we'd love to have you. We'll see you next time.